Imagine a financial partner that understands your dreams, whether it's saving for your child's education, building an emergency cushion, or growing wealth for the future.
Wealth Buddy is that partner, seamlessly connecting your daily finances to your long-term aspirations through investing and saving tools that work across all your devices.
Do you have a short, mid, or long-term goal? We provide smart automated tools to make it happen. Set any target amount. Choose your perfect savings rhythm and watch as we handle the rest, moving your money effortlessly from intention to reality.
When you're ready to grow your wealth, our curated investment marketplace opens doors to opportunities that were once available to financial experts.
From government-backed treasury bills to dollar-denominated portfolios, every option is carefully selected to match different goals and risk appetites, all managed by a team of experts so you can earn competitive returns without the usual complexity.
The journey to financial freedom starts with a single step. Take that step today with Wealth Buddy, where your money doesn't just sit, it grows, evolves, and achieves alongside you.
Welcome to Wealth Buddy.
We will be diving straight into the program of today. For introductions, my name is Adedeji Babatu, coordinating the event and moderating the panel. Thank you very much. Such an honor for Meristem to find ourselves in the great city of Ibadan. On behalf of Meristem, I would like to warmly welcome you to today's Center of Influence program themed Building, Protecting, and Transferring Wealth. It is indeed a privilege to gather here in the great city of Ibadan to discuss a subject that remains central to financial stability, legacy creation, and long-term prosperity. In today's rapidly evolving economic environment, wealth creation is no longer enough. We all understand that it's the 4 points of why we are existing. We have to create life for our children. We have to also live the life, and we have to transfer it accordingly to the near future so as to make sure our names don't die and pass out with us. You know, at Meristem, we remain very committed to empowering our clients, families, legacies, and businesses with the right financial guidance, investment solutions, and wealth management strategies that help secure both the present, your aspiration, and future legacies. And that's why we've come in as a team today to meet with you in Ibadan, have conversations, and show you some of the strategies we use to help provide solutions to our clients in the past year. And based off this, I'd like to declare the event open as we would start the presentations and discussions in accordance. To join me in today's discussants will be Adeniyi Adebisi, who's the head client development unit at Meristem Securities. Adeniyi comes with a lot of experience from our side, where we call him the leader. And this leadership and experience he will be exhibiting in while he's presenting later on today. And also joining him is the Chief Operating Officer of Meristem Finance Limited, Oluwakemi Omoniyi, who also has a vast experience in wealth management, transitioning now into financing, which seems to be one of the very, very pivotal parts of our lives when it comes to personal and then businesses as well. So it will be a robust society today for discussion. And based off that, I would like to welcome them as I'll be reading some of their profiles. For Oluwakemi Omoni ACS, who's the Chief Operating Officer, Meristem Finance Limited. Oluwakemi is a seasoned wealth and investment professional with over a decade of experience in the financial services industry. She began her career in financial advisory, where she supported clients in building structured investment portfolios and achieving long-term financial goals. Over the years, she has progressed into senior leadership roles, combining deep investment expertise with strong operational and strategic capacities. She previously led the real estate management unit at Meristem Wealth Management Limited, where she oversaw the firm's proprietary real estate investment and delivered high-level advisory on the property investment strategies. She currently serves as the Chief Operating Officer of Meristem Finance Limited, where she's responsible for driving operational excellence, strengthening execution frameworks, and ensuring the seamless delivery of firms' financial services. In this capacity, she's played a key role in aligning business strategies with operational efficiency, scaling processes, and supporting the firm's overall growth agenda. Her experiences span wealth management, investment structuring, and business operations with a strong focus on building systems that support sustainable wealth creation and efficient service delivery. Ladies and gentlemen, please welcome on the stage this morning Oluwakemi Omoni. Round of applause, please. I think is worthy of clapping because the journey for Kemi has transitioned from being a computer science graduate into a magnificent wealth advisor. And now she's sitting as the Chief Operating Officer for Meristem Finance Limited. I think this is good trajectory and is worthy of an applaud. Thank you again.
Thank you, Robert. Good morning, everyone. Thank you for coming to this program, and also for our guests who are joining online. Thank you for taking time out of your busy schedule to join us to learn today about acquisition and transitioning wealth. Wealth. People mistake wealth and income and having money. There's a lot of misconception around the word wealth. People believe that you just to be wealthy, you just have to have money. Today, we are going to delve into what exactly does it mean to have wealth and what it means to have transitioning wealth. So, wealth is no longer defined by what you earn, but by what endures. We've heard about families that were very wealthy back in the days, and then more recently, you only refer to them by what they did or what they had in the past. I don't want to mention names. There are quite a number of industries, great companies that have been there in the past that did not endure. And there are quite a few that have endured, that have transitioned from the first generation to the second generation. I think very minimal, maybe one or two in the third generation. We, to the best of my knowledge, in Nigeria, not really seen any that has gone to the fourth generation. And at Meristem, we have really made it our life's mission to advance financial well-being of clients, and also to, if I may use the word, proclaim the message of transitioning wealth. Contrary to popular belief, wealth and hyperconsumption don't go hand in hand. A lot of people, particularly in our own climb, they tend to see hyperconsumption, how much you spend, as how wealthy you are. In the real sense of it, the ones who are very wealthy are rarely flamboyant. they spend they are very they spend discretionarily, if I may use that word. And majority of those who really have the funds live below their means. They are quite modest. Yes, one or two living somewhat ostentatious lifestyles, but the Gen Zs will say, what's the word now? They say you move silently, silent money, and then that's when you hear old taker. You say somebody is an old taker. You had it before, doesn't mean that you have it now. We don't want people to be an old taker. Enduring wealth is built on intentionality, the structures that you put in place, and diversification of your investments, and how well your financial choices align with your long-term vision. We have to align choices with vision. There's rarely the people who come into accidental wealth, but more than often, people who come into wealth come with it by being dedicated, making intentional decisions when it comes to their finances, and also having properly defined goals and financial plans, and then executing them judiciously. Many earn well, yet few sustain the wealth across generations. And I believe that the young ones are coming up, but the ones that are people like us, we've learned that salary alone does not lead to financial freedom. Not even the way the country is going. Inflation is everywhere. We would say that Nigeria, things are hard and all of that, but right now inflation is everywhere. Even people abroad will tell you this much, that the inflation is biting. The price of fuel changes is everywhere, not just Nigeria. Okay. Wealth versus income. High income does not necessarily mean long-term wealth. You can have the income and it's eroded by your expenses. It can be eroded by debt as well if you don't plan properly. And if you don't have a solid structure, your wealth can be quickly eroded. In actual fact, to get income, to get wealth, to build wealth, you have to consider your income, take away your consumption, and then factor in returns and times. And the time value of money, your 1 naira today is not your 1 naira tomorrow. Salary that you earn, income that you earn from your day-to-day activity is your active income, and it's tied to your time and the effort that you put in. Wealth is the totality of your assets that generate income and that you preserve the value and that compounds over time. And real wealth comes from multiplying your capital efficiently over time. At some point in this presentation, we will see what the effect of compounding is. Some people make investments. They get returns from their investments, and then they spend it. You are, in a way, just still saving the money that you have. And we always say that people who make investments and get returns and spend it, they are not really making their investments. I don't think anybody should be spending returns from their investments except they are in retirement. And those in retirement, you must have had an active plan over time that allows you to generate passive income over the years, such that those investments can now start to pay you in your retirement for you to comfortably be able to spend from that money. And in that way, you are creating active income for yourself, if even in retirement. But right now, if you make, let's assume I make, say, ₦1 million on a monthly basis, and then I take that 1 million naira, maybe I have expenses of about 300, I have 700 left. I'm able to maybe save 300 out of it. The rest of the money still goes to some expenses, sustaining myself throughout the course of the month, which means that every month I'm able to save 300,000, and And at the end of the year, I'm able to save, say, about 3.6 million at the end of the year. Now, let's assume that I gain from that 3.6 million, say, on an average 10%, and I get 360,000 on a monthly base, on an annual basis, after tax, assuming after tax. And I take that same 360,000, I spend it. If I put it in investment and I earn, say in December, I take that 360,000, I spend it, I use it for Christmas, buy shoes, buy all of that. I buy all of that. The next year, all I have at the beginning of that year is 3.6 million. Still, I save another 3.6 million. I have 7.2 million at the end of the year. Whatever interest that I get from it, I spend it as well. And I keep doing that every year. Then I want to plan a retirement and build wealth on that. I might as well have just taken that money and put it in the bank, because at the end of the day, I will not be able to gain the effects of compounding. Assuming that I had structured myself so much, and then that 360,000, I didn't take it out. Well, let's say I took 60,000 out just to enjoy myself. Then at the beginning of the next year, I would have 3.9 million. And then I save again. At the end of that year, that 300,000 that I didn't take out would have generated its own interest, because it would have added back to the original money that I saved, and I would have been able to generate additional interest. And by so doing, I'm able to continue to accumulate. By the time I had the interest and the principal of the following year back, there is also that compounding effect. Also, there's a chart somewhere down the line that shows, I will show us where we get there, that shows you the effect of compounding. And in fact, that analysis doesn't even show that you had you put in that funds. It just shows becomes, say, over a 20-year period, assuming the person who was saving that money along the line. Please. So I've talked about active income. It requires conscious effort and time investment, such as a job or freelance work. It is directly tied to the number of hours that we work. Most often than not, although people will say that what they get is not tied to the hours that they work, but I mean, in the real sense of it, often subject to taxes at a higher rate. If I'm to compare that word for word, they are taxed at a lower rate. No government would come and then apply what your payee percentage should be on your investment. What most investments are subject to withholding tax, generally speaking, with the exception of shares that is subject to capital gains tax. And with the new law, there is a cap on, how much is subject to that withholding, that capital gains tax. And it's also subject when you are moving from one asset class to another, not necessarily while you're still in the investment. For active income may lead to burnout. So this point speaks to people thinking that you can get money only by working. Imagine your daily job. If for those of us who are still doing our daily job, imagine having to run 2 or 3 of that same job. Think about what it would do to your health. Think about what you will do to your mind and all of that. And that's why we have this happened with this jackpot syndrome, and even took loans to travel greener pastures. I mean, nobody can fault them for that. And in a bid to ensure that they are working actively to pay back those debts that they are amassed while traveling, they've had to overwork themselves. And that has led to, sadly, quite a number of young people passing on and all of that. So you can't want to generate wealth only by active income. You have a question, sir? Okay. By only active income. So it's very advisable to get passive income. So how do you get passive income? For some people, they are very lucky, they are very enterprising, they can do businesses and they can earn money from those businesses. For people like us, I always jokingly say that the only thing that I know in this life is book. If I start to sell something, I will dash everything out. It's really book. If I decide today to not work again, I probably will be consulting in this field. So for those of us who only know book and don't know how to sell things, the way for us to get passive income is investments. I was explaining you getting returns from your investment. Imagine locking funds in bonds. Every 6 months, you're getting coupons. You're locking funds in real estate. You're getting rental income and all of that. So those are other ways of getting income aside from your day-to-day jobs. And that allows for stability. Now, what are the things that can stop you? The threats. The original word on this slide is destroyers of wealth. We decided that we didn't want to, project that. But so what are the things that can destroy the wealth that you are accumulating? They're inexhaustive, but these are the key ones, and that's lifestyle inflation. You see someone who regularly would just drive their Corolla car, wear their regular Adire and Ashoke, like my colleague for me, look beautiful and all of that. Now, something happens and their management in their office decides to increase salaries, and then she wants to wear Louis Vuitton because she has arrived. And then they promote you, like Babatunde was saying, you get a promotion and then you feel that they have to know, they have to feel it. Then I have to carry Prada bag. Those lifestyles, because what was wrong with the bags that I was carrying before? They looked beautiful. It's not that you cannot have those things, but when you make it, you make it seem as though you have to. You can have excess. You can pamper yourself sometimes. You can get. So, for example, for those of us who bought a particular stock that was maybe we bought at 500 and then now it's at 2,000, we have arrived. And then when you get maybe you increased your units as it was going up, and then you get the dividend. You can choose. You've earned it. You can choose to spoil yourself or to splurge at that time. But when you try to create a lifestyle that you can't sustain, then you begin to erode your wealth, because the investments that you're supposed to make with those extra income that you have gotten, you spend them on things that they've said I should stop saying luxury items are liabilities. Some people say they are assets and they resell. But how many of us really, really and truly resell those things? So after a while, you get tired of buying them. Or like those of us who use particular kind of phones, there's pressure to keep, every time they bring up the new one, you have to buy it now. You have to, because who will hear that I'm still using an iPhone 15 at this, when some people are already using 17. So those are the kind of lifestyle choices, and the prices continue to go up. Sometimes there was a time that I didn't have to think twice to change my phone. Now I want to change my phone. I've been thinking about it for the last 1 month, because the prices of those things have also gone up. That's inflation in your lifestyle. So those are kind of things that erode your wealth. Poor asset selection. This one is very common. People don't think that in selecting investments, you have to consider quite a number of things. A friend tells you that, oh, the price of this stock is going up, and you just go into it. The question is, does your risk appetite allow you to buy stocks? Say maybe my husband gives me my children's school fees in advance. I have to pay it. There's nothing wrong in putting it in mutual funds. There is nothing wrong in there's nothing wrong in putting it in, say, treasury bills. If I'm going to have some time before, this are stable investments. Now I want to go and stake it because, you know, there was a sell down on UBA and the price has gone down. And then I believe that I can get opportunity in that. Then I put the funds there, believing that forget it. By the time I'm going to pay the school fees, I'll be in the money. How I will pay the school fees and keep the balance for myself. Oh, I'm the Proverbs 33 wife. I've made enough money from this thing. And then time comes for me to pay school fees because there is no shaman or babalawo or native doctor or dibia that has been able to crack the stock market and tell you that on the 31st of July 2026, the price of UBA will be 75 naira. Nobody has been able to tell us that. What we know is that the fundamentals support the fact that this stock price has an upside potential to get to 75 naira. The date, the time, the hour that it will get there, nobody knows it. So I then take that money, I put it in it, and then time to pay the school fees. And I bought at 44 naira, and the price at that time is 40 naira. I will not be able to afford that school fees at that time because I would have lost principal. So yes, I made the right choice in investing, but I had a misjudgment, or I picked a wrong asset class to invest in at that time. Lack of diversification. Every investment has a risk, some minimal, some risk-free. For example, federal government investments, you would say comparatively risk-free. But there is a trade-off between risk and return. There are other investment classes that I can put funds into that will give me return. So there was a time that Treasury bill was yielding 24%, 25%. But right now we are in the 16s, the 17s. Now, imagine if I had created a retirement plan on a portfolio. And for me to be able to meet up with my expenses in the next 7 years, I have to average, say, 21% on that portfolio. And the only asset class that I've invested in is treasury bills. What happens now that the rates are down? I will not be able to meet up at that time because the cash flow has been structured in a way that I have to part-time have an average of 21%. Now you can diversify your portfolio into other things, stocks, real estate, and all of that. When the stock, there's usually an inverse relationship between those asset classes. When you are having lower yields in your money market, for example, the stock market may be doing well. So there's that balancing effect. When one is doing well and one is not doing so well, the average return on your portfolio will be stable. And that's the advantage of diversification. Behavioral biases. This is very common here. The most common one is herd mentality. Everybody is going in one direction. For example, we've all heard that Dangote Refinery is going to list, and everybody is waiting. Everybody wants to buy. Even those who don't know what the price could be, whether they can afford it or not. Everybody is asking. Everybody wants to buy. Even those whose risk appetite do not support investing in shares at all, they just want to buy. And that's it. That's a bias. That's where the money is. That's where people are making money. So I want to go there. You don't consider your liquidity needs. You don't consider your risk appetite and all of that. And you just want to go into those investments. they can easily erode your wealth. The example I was giving about prices, there's some people that their portfolios. So, for example, in Meristem, when we create IPS is an investment policy statement that guides the management of a portfolio. We factor in the risk appetite, we factor in constraints, something as little as I don't take alcohol, and I will not put my money in an alcohol producing company. We factor it in. You will not see the portfolio manager buying a Nigerian brewery share, for example, for that client. We also factor in liquidity needs. I travel every 6 months. I travel every quarter. I'm going to take money from this portfolio. There are people who they don't leave loose cash. So if somebody has 200 million cash, the person puts the 200 million in the portfolio. Now, imagine the person has filled the risk appetite. The person is a very highly aggressive risk taker, and then the portfolio manager has put the funds in shares or has put the funds in a commercial paper, and then 2 months down the line, the client needs funds. He needs to go for his medical trip, and he needs funds from that portfolio. And there is no liquid asset, there's no near cash instrument. And it means that you would have to sell something from that portfolio. Now, there are times where the stock market is bearish all round. It's possible, very possible. So if you're selling at that point, means you're pulling out of some stocks at a loss, and you have lost capital. That can easily erode your wealth. So behavioral biases that we have can erode wealth. I don't want to put funds in certain things, no matter how well they're doing. That also can affect what your returns on your portfolio is. I always have to keep my money under my pillow. I can never go to the bank. That would erode your wealth. There have been times where there were currency changes, and there are people who had forgotten that they kept money somewhere, and by the time they found it, the change in currency had, that is lost. So there are some behavior, quite a number of things that can fall under behavioral biases that can erode your wealth. Now, what are a few things that can drive your wealth accumulation? It's very important that you develop a plan. Meristem always has this financial planning session that we do periodically that talks about the importance of planning. It's even mundane things as little as stocking your pantry. They must fall in your plan, because the 200,000 you take to a store, if you take 200,000, they say a few years ago, you take 200,000 to a store, they can even get the manager of the store to come and attend to you, because your shopping cart will be very full. You take 200,000 to a store now, you just take just one nylon bag. You have to even pay for the nylon bag nowadays. You have to pay for it. So it's very important that we have a plan. And I always say that as investors, you don't necessarily have to know the length and breadth of the market. You don't have to know every information, but at least the basic things. Know what this investment is about. Know how does inflation rates affect you? How does MPR rates affect you? All those little things, those little information, they can go a long way to help, or to help you in accumulation or building wealth, because you would factor those changes in the economy. Some people have not reviewed their financial plan now, despite the fact that there's a new tax law. You need to know how that tax law affects you. How does it affect you? Then you review your plan. If, for example, you had structured your portfolio in a way to say these are the returns from that portfolio, and is going to cater to some needs. For example, who have plans to send their children abroad, and they are factored. In the past, there was really no tax on dollar investment. Please pardon me. We just have to break for a few minutes.
Thank you very much. We would like to welcome into our midst the Imperial Majesty Olubadan of Ibadan, Oba Rashidi Adewolu Ladoja. Kábíyèsí o. Thank you for gracing us with your presence, sir. It's such an honor. Thank you very much, sir. Kemi.
Thank you, sir. So you have to factor in all of those things into your plan and review your plan. You don't just go creating a plan and then go to bed with it. You have to review. There's a constant review. Even as asset managers, we review our clients' position, their personal position, not only the investments, their life situation on an annual basis. The IPS is not just a one-off document, it's reviewed annually. And we also let the clients know if at any time during the course of the year, before the date of the review, there's any change in your situation, we have to do a review and realign your portfolio to the situation in life. If somebody who had planned a portfolio and stated that he didn't have any liquidity need in the next 5 years, for example, suddenly loses their job, you have to realign that portfolio to factor into the possibility of that person needing funds from that portfolio. So it's very important to develop a plan and continue to review your plan. Your earning power, we've spoken about this, building passive income in addition to your active income. Create investments that pay you. Create investments that you would earn return from. The government has made it so easy that there's a federal government savings bond, and the minimum for that is 10,000 naira. You can buy a bond, and it feels good to get money that you didn't. It's not your salary. Every 6 months, something comes into your account. I have a friend, we work together. She's always once she gets dividend like this, everybody must hear. She say, I don't arrive for this Lagos. She'll be and then you wouldn't say, now wow, that money go big. She'll say, hey, now 30,000 naira. But you know what it feels to get an alert of 30,000 naira that I did not plan for, that I was not expecting. So it feels good to get those monies, but also when we get returns on investments, it is very important to plow them back into investments. Some people will say that's not good enough because when you lose on that investment, you have lost your principal and your interest. That's where diversification comes in. You don't, if I get dividend from shares, I don't necessarily have to put that back into shares. I can use that to build a mutual funds portfolio. And that's a safe investment. And I'm not going to lose that money. So if anything happens and say price is reduced and I lose money on the shares, but I've gained returns that I have saved elsewhere, and that is also generating additional returns for me, and eventually bit by bit, and that's how one gets to build wealth. That also has spoken to diversification, automating your savings. You see, when they say amnesia, it's not only people who have a medical condition. We have selective amnesia as people. You know, when that money is going to come, you sit down and you talk about, when I get promoted, this salary increase that I'm waiting for, I'm going to be saving this amount every month because I was not expecting that increase. I'm going to be saving it. I promised myself. And then that money comes. Then your cousin will need money for their daughter's school fees. Your brother will suddenly have one urgent business that he needs to put money. Your children would need new shoes. You will realize that school your children have been going for the past 3 years go up to standard. So then you want to change your child's school. Now, assuming when you were expecting that money, you had set up a standing order. We all use banking apps now. They've made it so easy. Even the investment apps, you can set up recurring investments, and money that you don't have is not yours. No matter how magnanimous you are, no matter how much of a cheerful giver you are, that money is not yours and you can't give it because it goes out of the portfolio. It is what else out of your bank account rather, and it is what else you have in your hands that you can plan on. Black tax is a thing and is very rampant. People ask you for all sorts. Once you just start to drive a small car like this, you have become the breadwinner of the clan. Everybody will come to you for one thing or the other. In the past, it used to be the elderly ones. Now, no matter how young you are, be you 21 years or 21 years old, so long as it looks like you have something, you have started working, you are a breadwinner. You have to win bread for others to eat. It's very good, and that's why the wealthy ones really have plans. The planning is very important. They have plans even in their giving. They plan their philanthropy. And that's where they gift all the things. They're paying somebody's school fees. They're doing all of that. Because the other monies that they have plans for them. So they will set up a philanthropic trust that will cater to all those giving. So even me with my small money, I need to be wise that I also have to automate my savings such that it is what if somebody comes to me to ask me for 20,000, if me myself, I don't have more than 25,000 in my hand, I will give you what I have from that. And I'm not being wicked. But if that money, I had plans to invest it, I didn't automate it, it comes to my hand, and somebody comes to me with a very heartbreaking story, I'm going to be very, tempted to want to give them more than. And in actual fact, I don't have that money that I'm giving away because it should have been channeled to something else. And that's the importance of automating your savings. I've talked a lot about the compounding effect. And this is what I was saying about compounding effect. This person puts in 1,000, by year 5, 1,283. It looks small. Small to say, just 283 in 5 years. I could have bought baskets of tomatoes and made plenty money. And that's part of the behavioral bias that I was talking about. You could have also bought baskets of tomatoes and you could have lost all. We are tempted to believe that when returns are not great, we are making a wrong choice, forgetting that we went into that asset class for a reason in the first instance. You can structure your investment in a way and select the amount that you will use for your tomatoes trading. And know that this other part that you are putting in treasury bills, there's a reason for you putting it in treasury bills. There's a reason for that diversification. So you don't mind whatever returns comes on it. Forget about it. Though I remember my early years as an investment advisor, there was this particular client. The client would only do 2 types of investments: treasury bills and federal government bonds. Now, there were times where I felt that, but this man could have done this thing and have made big money now. But the clients, no matter what you say, will not move out of that asset class. And guess what? Before my very eyes, I saw the trajectory of growth of that client's investment. And today, I look at it and I said, this man actually made the right choice. Because he knew his risk appetite and he knew that he couldn't take it. There's one of the questions on our risk questionnaire is if 2 questions actually. One of them is if you had an investment that gave you a possibility of loss of 60% and a possibility of gain of 90%, and you have another investment that gives you no loss and a possibility of gain of 30%, which would you go to? Is a very key question in risk. And another one says that if you were in a portfolio and your portfolio had a dip of about 20%, what would you do? Wait in it to see it go back, immediately exit, or exit a portion and keep a portion? These are very key questions. There's no wrong answer. and there's no right answer. Whatever answer you give is a function of what your risk appetite is. So that client knew what his risk appetite was. And even though there were times when treasury bill was as low as 3%, there were also times where treasury bills were as high as 20 something percent. And the clients kept making those investments and kept, whenever it takes we get coupons, it brings them back and he invests again. And over time, we have seen there are quite a number of those clients. And as an advisor, it's very beautiful for you to see a client who started investing with 1 million naira and the client now has investment of about 500 million naira. It's very beautiful. It makes you feel that your job really matters. And it feels good to know that you were a part of that growth. So compounding has a lot to do when it comes to investments. And that's why I said earlier on that it's not too good for you to make investment and you're taking out every return from that investment. And that takes us to, we've been talking about acquisition and all of that. That takes us to phases in life. What happens in all of these phases? I'm not sure we have people within the first bracket, but the first bracket is the beginning of life, really. You just got a job, really, for most people, lower responsibilities. Your savings, your ability to save is higher at that stage, and the kind of investments that you'll be doing, savings accounts, mutual funds. More recently, a lot of a few of them can do treasury bill, at least with Meristem. Although treasury bill minimum for treasury bill is about 50 million, but treasury bill backed instruments you can do for 25 to 30 years. Some of us already, are married. We're having a few responsibilities. We're starting to acquire assets. Ability to save is going down. We're able to do advanced savings. A few people are able to do bonds in this life cycle. 30 to 40 years, planning for the future here is very necessary. Some people believe that life begins at 40. Okay, if you say so. Life insurance scheme, mortgages, children education plan, very, very important. Yes, you're earning good money. You can always pay your children's school fees, but it's important to have plans because anything can happen. Ensure that the future of these children are secured. 40 to 60 years, active retirement planning, not just retirement planning, because it's expected that the first day you start working is the day you start planning your retirement. Active retirement planning, have a retirement portfolio in place, enhance your income. We talked about passive income. Build investments that pay you, have a business if possible. For people who want to go into business in retirement, these are the times that you should have already set up those things. You have to think about your dependents. You should have wills and trusts and tax advisory, if possible, for those that it's possible for offshore investment. 60 years and above, we don't expect that anybody is just struggling and doing anything at this phase. What we believe for someone who has a properly planned life is for this phase to have general peace of mind. Everything is in place. You don't have to lift a finger. Some people are already even paying their grandchildren's school fees at this point. And then this is where you have your wealth consolidation and start thinking about the possibility of transfer. So wealth legacy, you preserve your capital. You think about your generational transfer, strategic growth. You think about legal protection. If I'm not here, what happens? What are my values? What are the things? Some people, we had a client who says that is what he wants to leave behind is that his lineage, the minimum educational certificate that should be in his lineage, is educational level rather, should be MSc. So the client set up a trust that assists members of the family to ensure that the minimum educational level anyone will get to is the master's degree level. So that is a value. So you plan your wealth in a way, you plan your legacy in a way that your values will be aligned. And, the wealth ladder are very important. We've talked about earnings, we've talked about savings, investing, you structure, and then you leave a legacy. And at this point, I will bring in my colleague, Adeni Adebisi, to come and speak to the legacy portion. Babatini, please. Thank you for your time.
Thank you very much, Kemi. That was such an insightful session. I would also like to welcome in our midst Oba Koladaisi. It's a pleasure to have you here, sir. Good morning. I remember growing up and we come to parties in Ibadan and they sing Ao Baba Dele. I'm sure he's familiar with the sound. It's a pleasure to have you here. Thank you so much. Moving forward in today's program, will be taking us on the protection and transfer of wealth will be Adeni Adebisi ACS, who's the head group client management, Meristem Securities Limited. And I'm just going to take a quick profile of Adeni. Adeni is an experienced finance and investment professional with deep expertise in client advisory, sales strategy, and digital transformation. As head of client development at Meristem, he leads the strategic client relationship and drives portfolio growth through bespoke investment solutions tailored to high net worth individuals and institutional investors. Previously, as a wealth advisor, he successfully structured and managed multi-asset portfolios spanning equities, fixed income, real estate, and alternative investments. He also played a pivotal role in advancing Meristem's digital transformation agenda, enhancing clients' onboarding engagement and overall experience through technology-driven innovation. Adeni holds a BSc in accounting from Bowen University and an MSc in investment analysis from University of Stirling, United Kingdom. He is also an affiliate of the Associate of Chartered Certified Accountant, ACCA UK, and an associate of the Chartered Institute of Stockbrokers, CIS, Nigeria. Ladies and gentlemen, please welcome Adeni Adebisi as he speaks through the protection and transfer of wealth. Round of applause, please.
Good morning once again. Welcome, Your Majesty, once again. It's a privilege to have you here, but we'll just go straight into the presentation. Kemi has done pretty well discussing the primary variables that when life starts, but I looked at the audience and I said, this age bracket, they are probably either close or near retirement or in retirement. And I guess this is probably the first half of it, they'll pass this on to their children. And this second half, maybe is something great that we can all reflect on. But I think Kemi has sort of touched a lot of background parts to this conversation. But the thing about it is, and I think that one of the things that we're very particular about is that how do we share knowledge that you can also share with other people? It's not enough for us to just speak today. It's for enough, the joy for us is that you're able to sort of pass on that information to others. It's very, very important. We just like to build wealth. I think primarily people just want to have money. I think that is just the local, nuance of it, that I want to have money. The workings, the growing, the faces on all that comes with it is secondary. And it's understandable. At some time early in the year, we're having a session internally and we're looking at, and there was an argument that how many Nigerian businesses do you have in its second generation? And then we struggled in the room. We had 1, 2, 3, and then we struggled. Even the few that we were able to select, the question was, there was still argument about, are you sure, are you not sure? And then we left it. Okay, how about the ones in the third generation? At that point, the room was silent. We all struggled. But then we now say, you know what, let's go to other jurisdictions and then have the same argument. And let's say use America as, a very, an example. And then we went second generation, there was a very long list. You went third generation, there's quite a long list. You went fourth generation, there's quite a long list. And then that begs the question to say that, what exactly is the problem? Do we build wealth for ourselves and move on? Or do we build wealth for legacy? And it starts with following the faces. And in those jurisdictions, one of the things that's very critical is that as a unit, as a family, because wealth is not individual. If you want to build wealth, it's not individual. If you want to have money, yes, you can have money. But wealth must be able to transcend generations. That's the quality of the wealth. But if you want to have money, yes, it has. And that's where, that flow of preservation to transfer comes in. Because everything that is done is very deliberate. And it's that element of it being deliberate that is the issue here. As I say, you can go back. Leave this here. This is fine. Because from training our kids, from the choice of the profession, from the business model, from every single thing or action that is taken is done just so that this business is able to outlive the founder and also outlive the heirs. And there are different ways to it. The founder of a bank probably would not treat his assets the way a founder of maybe someone who's into agriculture would treat it. They're two different things. The skill set is not the same. Some may require, maybe banking, someone who owns a bank may require others to manage on their behalf because of the skill that's involved. And someone then who's managing a farm, most likely different sort of talent and skill that is involved. But in the structuring of all of this is where, what's on the screen is pretty primary. Is how do you structure this phase of preserving so that you're able to transfer and then is able to sustain beyond that. Insurance here is like, even to buy car insurance here is a very big issue for us because we feel like, why am I paying somebody to insure my car when I can manage it myself? And insurance industry has struggled over the years just primarily because we don't believe in paying for it. So some people is when they have issues with their car, maybe someone runs into their car, that's when that day they go and pay for the insurance and they want to make a claim for it. But in terms of planning, insurance is a very, very critical tool in planning because you can use it. Insurance is not about car insurance, which is like the most popular thing, but it is what exactly do you want to achieve with it? Especially with life. It can be a tool to preserve the assets or to also preserve life and not quality of life. Kemi spoke about diversifying asset earlier and then the client had this level of risk and then he was investing in assets and all of those. One of the biggest pitfalls in our culture is owning real estate. Arguably one of the most illiquid assets, and in terms of returns, arguably also the lowest in terms of when you consider rent alone, for example, because there's two sides to the returns when it comes to real estate. There's the rental income and then there's capital gain when you trade it. But if you're going to hold it, the average rental yield in Nigeria today is probably around 5-6%. If you value the asset based on per time, it's about 5-6%. Which means that some people are very wealthy, they don't have cash because a big size of their assets is tied into real estate and it's illiquid because selling can be slow. Also, the rent is very low. And lastly, if you understand tenants and behavior in Nigeria, also that rental yield I mentioned is that they will pay you. If the person is owing you, you now know that rental, they will owe you. They will leave the house. You will now spend money that you didn't make to renovate the house. So I'm not saying it's not bad as an asset, but it should be done considering the entire portfolio that you have. And question now is, where do you generate cash from? What do you want to preserve? What do you want? Like everything should be deliberate in terms of how it's structured. And that's what asset comes from rather. And we don't trade, we trade, but we don't trade. And before now, trading wasn't structured the way, if you want to buy shares, for example, you can go on the stock exchange and buy your shares and sell your shares and things like that. When it comes to in Nigeria, we have a very big landmass, and then agriculture is also something that's very prominent here. And commodity trading ordinarily should be a big part of our culture and investing because we have almost everything. But the culture of buy and sell is hence there. But beyond that, commodity trading and commodity as an asset class in the next 5, 6, 10 years would be the biggest part of investing in Nigeria. With all of the gold, the uranium, all of the things that have been found in the northeast and central area, for example, if you look at, for example, some industries have had to change their formulations to consider local produce in terms of what they use in their inputs. All of these things didn't happen before. And with that sort of attention coming to those areas, trading them as an asset and holding them just so that at least you're able to gain some sort of income as an external player. You don't have the skill to do it, but at least it just shows that there's a lot of traction happening also around that area. And lastly, okay, fixed income, Kevin spoke to that earlier. Clearly, it's something that's popular. You're buying bonds, you're buying that. It's still very important depending on where you are in life and what you intend to achieve. Let me talk about currency first. At least I'm probably arguably one of the youngest people in this room, but I know some people will say that there was a time when dollar was a naira to a dollar. I didn't live that era, unfortunately, but at least I lived the 100 naira to a dollar era. But in that era, we have gone from $1 to 100 to $1 to 1,400. You can argue that if I were holding my assets in dollars some years back, it is 10 times worth today. And that alone, can you say it's a bad investment? You cannot say. Interestingly. However, in the same time also, if you are someone that follows the equity and just equities market, I've also seen some companies grow in value 10, 20 times in value. So the question now is, are you better off holding the dollar or are you better off holding equities? For people who own real estate in Nigeria and some certain areas, that one now is going over the head. You go there on Monday, they say it's 100 million. On Tuesday, it's 150. On Fridays, and you're wondering what's actually driving this. It's the value that I placed on my asset. It's not left to you whether you want to buy, willing buyer, willing seller. So if I say my property is worth 1 billion and you say it's not worth it, you go to your house and go and sleep. Don't worry, you leave it to me. But the point is that we've seen Nigerian assets grow tremendously as the currency grew. So it's not been one-sided. But all of that, again, diversifying at the naira level is important. And depending on the side of wealth and asset that you have, and at the currency level, also very important. Some people still have kids abroad studying. They have some people have homes abroad that you have to pay. There are quite a bit of things that are involved. But depending on what you find yourself, everything is important. And then the balance is very, very critical. But again, we all have different situations. It's not a one-size-fits-all. What works for me may not work for you. Some people don't have any ounce of dollar liability or nothing. And the question is, why do you want them to hold the currency? Because all that they live and own is here. And they have no business. And some people have exposure all over the world. And so those issues can be tidied separately. Legal structure. When it comes to planning also your assets and your wealth and all of that, it's also very, very important because there are quite a bit of options that one can explore in terms of how to build a business. And also your wealth, how you want to keep your wealth. Whether you want to keep it in the vehicle that's owned by a company, you want to own it in your name, you want the trust to own on your behalf. There are quite a bit of options. And for every of those options, there should be a reason for it. For every of the options, so for example, if you are securitizing, for example, and what it means is that I have this microphone. If I want to borrow from bank A, bank will ask me for collateral. And I have to give them this microphone, say, take and give me the money. But sometimes this microphone may be worth 100 million. And what you need from the bank is 50 million. So when you drop this microphone at the bank, they give you 50. And that's the end until you pay back. But when you securitize, what it means is that you give, say, a trustee this microphone, say, hold it on my behalf. I'm not the one holding it, you hold it. And I would like to borrow to the capacity of these assets using that microphone, rather than just giving one asset to the bank and saying, take. So I take 50 million and tell them, oh, I still have 50 million naira space left because I have only drawn 50 million and I can draw it up. Similar actions, but different strategies and different outcomes. And that's what is extremely critical in the choice of legal structures. For some individuals, they set up a company. They figure that, I may be here 100 years, I may be here 50 years. Let all the kids come and be directors. All of us, let's know each other now. And if anything happens to anybody, everyone is sorted out We've seen that work in some families, and we've seen some families where that's their own biggest issue, because you see that little one that is left in their father and mother's name is where the problem still is. There's the very big Nigerian family legal family, just so that I put context into it. That's till tomorrow morning. You expect that they shouldn't have issues, but there are issues. But that's beyond the scope of this conversation. And lastly, on this slide, I practically focus on is estate planning. It's going to be unfair in this age and time to live and not gift or give whatever you have. It is going to be unfair to both the society and to you and to your family that you live and you don't give whatever you own, because it's going to be a waste and it's unfair. And that there may be reasons for it, why people do it, why you think, I don't want to write a will, I don't want a trust, I don't want to do anything, but it's unfair to society because it's easier to gift it and then someone else can use it than for it to just be there and not to be used by anybody. It's very, very, very important. I know that some people say that there's a myth that when you write your will, that means that you want to die or you soon. It's understandable, but again, there are vehicles that do not create that impression. If you give to a charity in your lifetime, you've given it, and you can see that the charity using it, putting it to good use, and that maybe gives you happiness, and that's fine. You could also explore the option of a trust, wherein you can enjoy the benefits while they're here, unlike the will, you only wait until but you can enjoy the benefit, and also your beneficiaries can benefit while you're gone. And one critical thing about vehicles like trust is that because you can structure it that the earnings or the income is what is enjoyed, both by yourself and your beneficiary, it can live forever. Generations from generations to generations can enjoy it. And that's one thing that happens in these other places where we see work. Because when you put an asset in a trust, for example, and you document that only the income should be enjoyed, it tends to always be there. And that, for example, can allow assets or companies outlive people because all the family will be enjoying is the income. I think recently it was in the news about the Kuti family saying in the argument about whether they sold the last catalog or not. And then he came out and said, oh no, we didn't sell the catalog. We only licensed it for income. The catalog is there. Which means that when this licensing round expires, maybe in 10, 15 years, whoever is family member comes and say, okay, you know what, we license again for another 10, 15 years, and they keep earning. And some families, they may have sold the catalog. $20 million, $30 million, how much in this world now, doesn't take long to spend $20 million. All you need to do is buy KBS's Rolls Royce, and $20 million is that's the end of $30 million, and the rest is history. But again, I hope that the message, is pretty clear on that side, and we hope that after this we can take questions, because it's not enough for us to speak all this English. Everyone in this room have different situations, and it's been very nice to hear your perspective of all of these issues and how we can learn from each other. We're just learning theory. The real wealth management and the real wealth creation, preservation, all of those is in your lives. And really hope that you share that experience with us. I've spoken about this off the top, but just a bit more detail is that they give two different flexibilities. One is pretty easy, but can be very problematic if you don't get it right, which is a will. There's nothing wrong with a will. It's a fantastic tool. Just that we are used to abusing stuff, but it's a simple tool. You write your will, you can change your mind anytime, you can update it. But the critical thing that people fail to do about will is that they don't document it properly, as stated by the law. Somebody writes a will and then keeps in their drawer. That's not a will. It's just a document. It's just a wish. You've got to file it, in the court, at the probate court, or probate, arm of the court. That's the most critical part of it. And you can change your mind. Every time you change your mind, you've got to go to same probate to withdraw the last one and keep the new one. that's when it becomes a legal document. Anything other than that is just a paper with a long list of wishes. But with a trust, critically, there are two sides to it. It gives you the option of changing your mind and the option of not changing your mind. So there's a revocable one, there's one that's irrevocable. You can decide that, you know what, this is what I'm documenting today, I'm not going to change my mind. Or I'm documenting today, I can change my mind, primarily first. Secondly, with a will, it takes effect when you're gone. With a trust, it can take effect while you're here. Because as an individual, you can also be a beneficiary of your own trust before it gets to your, kids or family members and all of that. So this, and then in some cases, you can combine both, depending on what you want to achieve. So you want certain things to happen while you're here, you can use trust to address it. You want certain things to happen when you're gone, you can use a will to address it, and you can combine them. And some people can also lay with, with an SPV, which is an institution where all of this is. So you can really it just depends on your peculiarity. But what's critical is that we have to do one of it, or all of it. Doing nothing, we don't agree. In short, we're a big fighter, against that idea of not doing anything. If you have a cup, give it. Okay, this is just a basic flow of all that we have discussed, summarizing, how that, we need to take those actions to move us from point A to point B, critically, to ensure that the assets that we have, outlive us, and lastly, that it goes beyond us. I think I'll close here, just so that I don't repeat over the things that I've said already. Transferring wealth to our beneficiaries and family is very, very emotional. It's tough. I've had a case of a client where we're going to do distribution. All I was holding for him was just cash. And we're going to do distribution. And then he said, can I be on the phone with him while he's trying to, I said, no, this is a very personal something that I think you should reflect and write your distribution. And then after a week, he sends me the distribution. And I saw the allocation. I didn't say anything. I said, fine. He said, final copy. I said, final copy. I said, okay, we'll deal with it. Then he calls me back and said, guess what? He said his wife saw it. I said, okay. I said, so sir, what do we do, sir? He said, I have to increase our share. I said, okay. so, and then he sent another copy. So I said, sir, which one should we use? He said, this one I'm sending now, I'll put her in copy. But please, you see that first one is one that you will use. And what's my own work? To keep secret. I applied the first one. But God help him and the rest of the family. The day she finds out, I wish him all the best. But the point I'm trying to make is that it's a very, very difficult decision to make. There are cases of people who have written their wills and filed it, and then luckily and unluckily for them, they welcome a new child or baby or something, and everything changes again, and then you have to start. And then if you're unlucky, even your new wife says, I'm going to have 4 kids. So if you're going to use this one as benchmark, you've got to make room for it. And these things are very simple, but they can mess up an entire estate and distribution. But this is our culture. We've got to adapt a lot of these things to our own culture. A lot of the issues that we face today is because we want to replicate those other environments. We have a different sort of complication here that our estate plan should address. And that's one of the things that is not there. Is that we are family oriented, for example. Our plans should, if that's what it requires, capture that essence. Some people would cater to their parents. Some people cater to their stepmothers. Some people cater to their stepbrothers. It's what our culture embraces. So when you take out all those elements from the estate plan, it doesn't make it unique, and then we struggle to take that decision. Because someone says you have to give to your children. Who says that? Nobody says that. You have to gift. The how, the when, are choices that you have to make. And I hope that we're able to make that decision easily as we proceed. Lastly, before we close, I think we should close here so that we don't keep us waiting and can take questions. At Meristem, the core, for us is the financial well-being of everybody. Your daily living, your tomorrow life, and the life after. Thank you very much.
Thank you very much, Adeni. Those were insightful illustration, and I think maybe I need to call my wife that she's holding the old shares, Abby, so I can sleep at home tonight. So we'll be having a quick discussion session where we'll enumerate some questions that we believe are integral to the discussions we've had today, where you all will also have the room to raise your hands, and then we'll pass the mics around the room. And I'll be calling back to the forefront the two presenters. Firstly, I'll call on Oluwakemi Omoni to the front to please take a seat so we can have a tete-a-tete for another 5-10 minutes. And secondly, I'll call Adeni Adebisi as well to please join us in front. I'll also be calling the Head Wealth Advisory, Meristem Wealth Management Limited, Fumilola Dekola Daramola, to the front as well. Round of applause for these experienced heads. They have seen it all. So if we merge all experiences in front, is about 60 years worth of experience. So yes, these are not young people. At least we can see the gray beards from Adeni, and we know the wigs are covering some of the Fumilolas on, So yes, I have some questions penned down here. However, I'll also be happy to move the mic around the room for some of you to also ask questions based on the feedback you already have from the room. So the first question on my side here is, and this is to any of you based on how comfortable you are to answer. I'm not going to call names. I know you all have similar experiences, even though it spans beyond each other. So what is the single most important financial decision you have advised the client to make that significantly improved their wealth trajectory?
Well, for that, it would be structure.
Okay.
Right. In speaking earlier, I mentioned that there are people who have the money, these clients, sort of had assets all over the place. A very wealthy client, but they were not maximizing the potential of the assets that they had. So the important thing first was to put structure in place and have a long-term plan. The clients had properties everywhere that were not yielding returns. They had people managing them. And there's this misconception about properties to say maybe you as landlord has to be the person managing it. And the important thing about buying properties is really just to buy, right? The way someone would go to a financial advisor for shares, bonds, we don't think about financial advisor when it comes to real estate. We think agents, right? And it's very important. A financial advisor would tell you, this property, is it worth your time? Is it in the right place? Is it a property that, because the way we do analysis on shares and bonds, we also do analysis on real estate as well. Is it a market that the bubble has burst that you're going into? Is it an emerging market? So we had this client, and then we put together all the properties. Some people were ripping them off. We sold down on some, put the funds into other things, and some properties as well. We aligned the property portfolio to the client's investment goal, and then we sort of factored that into their portfolio, and the client was better off for it, getting better returns on their portfolio, and then they eventually were able to set up a transfer portfolio that will run in the future. So I would say that was in quotes helping someone reorganize their life. Thank you.
Okay. I'm having everybody speak because everybody has peculiar clients, you know. So the better for us if each of them speaks, so it speaks to our personal needs. I believe what Kemi has said has spoken to our real estate portfolio rebalancing, and I'm sure Ni maybe he has another will he has written.
Okay, I don't know, but I'll try. So it was okay. It was a very simple situation. I had this couple who had they had a school, and of course, it wasn't doing very well, and they thought that there was more value in the real estate, and they sold it. And the idea was that they want to sell the school, and then we use the cash to create cash flow for them to use. So they had sold the school, we had created the portfolio, we had bought the assets, and then the problem starts. Who receives the income? And I thought it was a joke. The wife says, you pay to my account. Husband says, it's not possible. Pay to our account. I said, okay, you know what? We'll allow you some time. We let them in our boardroom and we stepped out. 4 hours after, they still hadn't settled. So we asked them that, okay, do you have a joint account? They're like, they don't. We're like, okay, you know what? This is quite a more straightforward way to solve this problem. You guys just go into the bank, create a joint account, and then you fill the form over again. And then we document, and that way we pay the income into the joint account. And both of you can then now decide at the family level how to deal with it. So in this case, the simple solution was just a joint account that they never had and never thought of using. Again, but that's not the joke. The real joke there was that the wife said that the husband's best friend had just taken a second wife. So there was no way she was going to trust him with the cash. So that was why she refused. Thank you.
Okay, I think for me it was debt structure. So I won't say had, I have a client that needs money or takes money from the bank for his business, and he will take a term loan, meaning that he takes the money in bulk, whether he uses it or not, he continues paying interest on that debt from the day he takes the loan. Then I then said, do you use this money at all times? So sometimes he has supplies, sometimes he doesn't, so, and he's still accruing interest on the loan. So why don't you make it an overdraft? An overdraft, you pay for the fees, but you do not get to pay the interest unless you draw. So you only pay on the amount that you have used. It is more economical for you, rather than taking the entire 100 million, put it in your account, it's sitting there in your current account, you're even paying current account maintenance fee. So it's not as if you're even earning anything on it. And I think it really clicked with him, and at the end of the period, he saw the amount that he was able to save just because of that structuring of his debt.
Thank you very much. You see why I allowed all three of them to speak. Diverse experience. For business owners, we've been advised. For large family managers, we've been advised, and for real estate holders as well. So my next question will be, how do you advise clients to balance aggressive wealth accumulation with maintaining their current quality of life? So in the room, at least we can agree that we have the 50s and above more in this room, right? And these people want to understand how to balance accumulation because they're close to retirement, but they still want to keep up the current life they're living. So how would you advise a client in this light? I think I will start with Fumi and then go to Ni and that way to Ken.
Okay, I think for me quickly is that you've been able to sort out your wants and your needs. Sometimes we just want something, not because it is necessary for us. So being able to have an idea of where exactly it is required, and also being able to separate your expenses from your income. So how much do you earn? How do you set aside your expenses that occur to you and being able to put it together? So sometimes when we script what our expenses are, you will see that the bulk of the so-called expenses that we think we have are not even necessary. So there's an ashwebi you buy. A friend is having, the new thing is that they do destination, maybe weddings or parties and all of that. By the time you're tracking, you have done like 3 within a quarter. So We are not saying don't enjoy your life, but can you make it maybe one instead of three? Can you not buy all the ashwebis? You probably have all the burnt oranges. Sometimes maybe I'm speaking to the women. You have all the burnt oranges. You have red. You have the pink. You have the purple. So is there a way where we can structure it? For some of our men, would go out almost every night to hang out. By the time you total the cost of your evening, you spend maybe 1 million or 2 million. So can we structure it? Can we structure it such that we know how much you need in the month? You're still able to aggressively save and still have the kind of life that you desire, knowing that the money that you have saved or invested is giving the kind of returns that may even match up for some of the spendings that you want to do.
I don't agree with your last point, but I guess I'm speaking for the room. But again, that perspective to it is that as life goes on, things to change. You cannot continue to take risk. You're not Aliko, and you don't except you have that type of wealth or that size of wealth to play with. Yes, you can. You've got the leverage of asset to deal with. But at the average of low income level, I think that at some point in life you have to slow down on risk taking. The focus as you approach retirement should be income, solely income. And again, speaks of me as saying is that for that income to be enough, you also need to cut your lifestyle. Another critical thing is that here is that people, we struggle with society more than with ourselves. There are cases of clients that we have to advise to move back in life as they're approaching retirement. And the question now is, you're approaching retirement, for example, how much cash do you have? I don't have cash. How many houses do you have? This is the number. Are you willing to trade, from one neighborhood to the other, just so that we can create enough cash to sustain your lifestyle? Are you willing to cut your lifestyle? Because let's say someone is an executive, they pay for your rent, they pay for your house, they pay for your diesel, they pay for everything. And one day you retire and nobody's paying for anything again. How do you do it? So what I feel is ideal is that as you progress, you appraise and then you make changes. But again, it also depends on the level of assets and wealth that you have. For some people, it doesn't work. But for most people, I believe we can always cut and rearrange just so that people, you can. But I think enjoying life it should be a part of old age. If you ask me, even young, but at least. Thank you.
I will align with both of them and say that it's amazing the amount of money that we can save just by looking at little things. As a shopaholic and someone who likes certain things, certain ways, I think what has helped me save in terms of mundane things is substitutes. Substitutes. And case in point, a very funny thing is paper towels. We use paper towels around the house. The locally made ones are messy. So I have little kids, and when they pour water and I use paper, then paper towels are all torn up and all of that in your hands. So I use imported paper towels. Now I buy Bounty. Bounty is very expensive. But then Members Mark is a little bit cheaper than Bounty, and you get the same value. Surprisingly, Bounty has 12 in the pack. Members Mark has 15. So I save money, get the same quality, and I even get higher quantity. So if you don't think about little things, you may not. If you start saving money for little things, and then you can plow those monies back into your savings because you said aggressive savings. And for households where you have multiple cars, again, I mean, if we don't learn from our own experiences, that's first place. So myself and my husband will walk on the same road. Now, because of timing, because I sleep very late, I like to, sleep a little bit more in the morning because you have to get the kids. And he doesn't like to sit in traffic and he likes to get out of the house at 5 a.m. Who does that? And because of that, we go to work in different cars and we walk on the same road. So recently we decided that we would buy fuel only from one source for a month. And then we will be able to narrow down what exactly we have spent in a month. So we did that. We saw it. It was alarming. And then we decided that we were going to carpool for some days. It would make some sacrifices and move his 5 a.m. to like 6. I would make some sacrifices and try to wake up a little earlier and get dressed earlier. And then we will get the driver to take the kids to school with the nanny. And then we did that and we saw how much we saved. We saw how much we saved. Yes, there are still some days where somebody has a meeting, we have different movements, and we have to go differently. Now, imagine if we insist on going because we have 2 cars and we can. So we go separately and then, all of that. We wouldn't be able to say, and I'm happy to say that we're able to use the money that we saved to buy Aradel, and is, making a lot of sense right now to us. So yes, from little things, you can save money that you can plow back into your investment.
Fantastic. I think we're getting insights. However, as a man, I would like to speak on behalf of the men. When Fumi was speaking, she said, we go out at night and then spend one. And I looked at it that we're only supporting the FMCG industry and the consumer, so we are still growing the economy one way or the other. That's one of the contributions from the men. Unlike, the women are contributing to the textile factory. So moving forward, there's a question from the online audience I would like to read. Farouk Abdullahi is asking, good day, my question is, what are the processes needed when someone dies and he has a shares? How will his family get access to it? I think in 1 minute, Kemi, you can just respond to Abdullahi.
Okay, when someone dies, there's one of 2 ways. It's either the person has written a will or has a trust, or the person has nothing. Now, if the person has a trust, there would be a way to, the trustees will either reach out, or the person has an executor who would notify the trustees of the person's passing. And that's a pretty straightforward and seamless process, because what everybody gets has been already put in the trust deed. That's very simple. Now, the most common 2 situations that we have is someone dying with a will and without a will. That's dying intestate. For someone who has died with a will, the process would be to apply to the probate registry to take that will through probacy, and then the court would do all of that. So there is a process of probacy where the will be admitted and all of that will be done. The other part is the part where the person dies without anything, and then administrators within the family will be appointed. I think maximum of 4, minimum of 2, and then they would also go through the process of getting a letter of administration and all of that. So when you have a will that has been admitted into probate or a letter of administration, pretty much easier. You can create an estate account and there will be share transmission into the estate account, and the representatives of that family will then be the ones signing and giving instruction on the estate account. The person can also reach out to Meristem registrars and probate services at 213 about Macaulay Way, Yaba, Lagos. They are also very much available online. I believe that the technical team can drop the details of Meristem registrars on the system so that Mr. Abdullahi can pick that up.
Thank you very much, Kemi, for that. Any questions in-house, please indicate, while I take one more question from my side, and I'll roam the room for other questions that might have. What is the most underrated wealth protection strategy you consistently recommend to clients and has worked? So I'm just asking for the Panadol of wealth advancement, the everyday medicine.
I don't think there's any that works for everybody, to be very candid. What works again, and that's where there's no one size fits all, and we have to be very plain and simple about it, because your Panadol can be my own Tensic and can be our own Alabuku. You get what? So, but again, just so that I believe that person looking for a simple answer to it is, it depends on asset that you are holding. If you are holding predominantly real estate, the Panadol is different. It's probably like 1,000 grams, because that's a different headache entirely. But if you have fixed income instruments, for example, it's a different thing entirely also. You could, and then the idea is, who is holding this asset? Are you holding it in your name? Is it in a trust? Is it in an SPV as an institution? Is it in a partnership? Is it in a one-man enterprise? All of this structure have different medicines that you can apply to it. So first is, let's assume that's an individual. That as in this case now you are referring to. At the individual level, what size of family that you have? Is it one child, one wife, two wives, three wives? Again, so it'd be nice to sort of hear out that person's situation, just so that we're applying the right medication, right? I think it's very critical that we should normalize speaking with advisors the way we like to speak to our doctors when we have concerns.
Thank you very much. I think Dr. Adebisi has spoken to this.
Okay, and also, if I may add, is that we should not procrastinate. There have been people who have done the right things. They have consulted. They have been given, what to do, and they have dilly-dallied on execution. And I think, as an advisor, and me would also, attest to this. The most painful thing is when you have spoken with your clients, you have agreed that there are problems or challenges, and these are the ways, and all of those things have been drafted. And the only thing outstanding is signature. And then the person doesn't get around to doing it, and they pass on. It is very, very painful as an advisor. And, we've been through that a couple of times, and we've had the family later coming to us to say, my mom had said they would do this and do that. But there was nothing we could do because there was no executed deed. And we could not come in. We could only empathize with them. So when there's something that's laid upon your heart to do, and then you take the step to do that, and all you have left to do is just to sign off. It's very important. Nobody prays that anybody should die, but I mean, it's just the right thing. It's a normal thing in life. Anyone can, pass on at any time. If you believe that it's an important thing to do for your family, especially with transfer, the best thing anyone can do is to leave their family, just set things in motion, right? Because even the best of families go into conflicts when assets are involved. Thank you.
Thank you very much, Kemi. I think I can assure you, Ibadan people are very precise. And that's why we've positioned our advisors at the back of the room. When we're done with these sessions, we can just take a walk. If you want to discuss finance, stockbroking, wealth management, trustee, anything, we're happy to discuss with you. There's a question in the house for the panel.
All right. Good morning. My name is Miracle Odelike, and I know emphasis has been laid on our daddies and mommies in the house with large assets and portfolio. All right, but for someone like me, whose dream of 30, under 30, as I'm close to 30, so that's no longer possible. All right, so I started my financial journey in wealth management last year after I'd worked a few years with CBN, but I didn't do anything in finance, and I wasn't saving, I wasn't doing anything until last year. After I left, then I joined Meristem, started with money market, and then recently started doing stocks with Meritrade as well. So what do you say to me? That's my question. What exactly would you advise me to do from now, going forward? Yeah, that's it basically.
Thank you very much. Fumi.
Okay, so you started, so it's a good place that you are right now. So it's you being consistent. So you setting aside a certain amount periodically, maybe weekly, monthly, as you get your income, setting it aside and knowing that you're saving towards your future and be very dedicated about it. And one thing that 30 under 30 typically face is black tax. So you have fathers, mothers, relatives that you're dealing with in the course of your journey. We're not saying you should not take care of your family, but be very intentional about how you do it. So I'll use a life experience. So I'm the last one of my family. I have like, I can't even count the number of nieces and nephews that I have. But they know that whatever need that you have that does not get to me on or before 30th of the month against the next month's salary, it is out. And I am pulling it all together. I already have set aside a certain percentage of my salary towards it. If whatever you're asking for exceeds that percentage, sorry, you have to wait till next month. I am giving, but I'm giving deliberately. I am being intentional about it because I'm also saving for my own future. And also, whilst you're saving, be very sure of the kind of assets that you're putting your funds into. So make sure that it is well structured. So you are not heavily skewed on one type of asset. Thank you.
Thank you very much. Nee, do you have a response? Okay. Any other questions in the house? Okay, please. Introduce yourself.
Good morning.
And then
Thank you. My name is Lawal. Thank you for the insightful session. My reality relates with the other guy. So I'm in businesses, and then one of the school of thoughts we take in business is that we reinvest. Every time we want to invest, want to go back to investing, and then, but in recent time, we've seen colleagues, younger guys like us, just pass away, and then nothing happens. Businesses at our levels are kind of you're the face of the business technically. At what point, one is that, do you need a financial advisor? At what point do you think that this money you're not reinvesting, you're saving for eventualities, for the future? And then what's financial management structure works for people like us? Thank you.
Responses.
Okay, I think I've got a very personal belief in business people that sometimes they don't have in themselves, because I heard every 3 days you guys don't have that. That chance is very slim, because you are the one that you drive everything that you earn. And I think first of all, as business people, you give yourself credit for what you do and how you do it, and able to sustain your businesses to then even pay people who work for you before you even pay yourself. That's a lot itself, by the way. But I believe that you have a plan, that whatever business you've set up already at the moment that you've been running, and then you have short and long-term goals of how you want to drive it to where you want to go. But one of the things I would like to say, first of all, with businesses is that you have to be very fluid in terms of how you see things, because opportunities lie within opportunities. Some people are very rigid and say that, you know what, I'm in this line of business and that's what I'm going to do. But I feel like as business people, what we seek is opportunities, not a type of business. There are quite a bit of stuff there. And because if you get it right and you're able to scale right, you can expand and grow and access credit. Yesterday, I was speaking to a client, and the argument was about source of credit. And he was explaining to us that he had a credit had a loan with the commercial bank at 28 or thereabout %. And because of the type of business, they actually can access credit from development agencies, but that they didn't know. And then they went from taking credit at 28% to taking credit from the agency at single digits, because there's a fund that the federal government has created that allows the government to fund. So what I'm trying to say is that information is very, very critical. It's important that you are aware of what happens in your ecosystem. Because imagine taking credit at 28% when you can access it at 9 or 10, whatever that single digit is. So that is very, very critical. You cannot, you have to just, have that on the side. And on second level of it is that you have to keep financial information. Profit is not margin. Margin is not cash. But for people that the accountants will say that some people say that they rather, follow what is in the cash flow statement than look at the P&L, because one shows you what cash you generated, one tells you how much profit you have made, which is basically just, tax profit. It's not essentially something that's income. And they would say that cash is the life of a business. Some businesses don't make profit, but they can run for life with cash. But again, at some point, you ought to hit that equilibrium where you're able to achieve both cash and tax profit, as whichever way you want to look at it. So there's quite a bit of things to it, but I think the most important thing is seeking knowledge as you proceed. Money is secondary, if you ask me personally. I think if you seek knowledge about what you do and how to make it better, some things will add up to it, because you are preparing, for things that are coming. But I don't think I'm great at doing business advisory, but I hope I've been able to, provide a guy. On a personal note, I had someone in the room that left, and I used to tell him that you've got to find a way to pay yourself as you move into the future. The company is not you. And there's tendency that when you want to eat, you take on the money of the business. When you want to pay school fees, you say, accountant, send me 10,000. I don't agree with that philosophy. You got to, at some point, I know maybe tough at the beginning, at some point, separate yourself from the business. You say, how much can the company make? I can't pay myself. But guess what? You are drawing from business to pay your bills. It's easier for them to be owing your salary because they cannot afford to pay, for you to have a salary on the payroll, because you're not even making money you think you're making if you can't pay yourself from that business. It's not there yet. So if you say, I don't pay myself, but I'm making money, it's conflicting. So you got to find a time where you can achieve before you're able to pay yourself, and that company still can progress without you deep into the pocket. So that's my 1 cent. Thank you.
Okay, thank you very much. Your question, sir.
Thank you for the insightful lecture. I am a Dr. Adeni Yamzat. I'm from the academy. I'm an associate professor. I want to ask specifically as an advisor, what investment option or advice can you give to someone very close to retirement that would bring a quick return apart from the usual treasury bill? Thank you.
Thank you very much. Keyword.
For someone that is close to retirement, quick return and close to retirement, they don't occur in the same book. However, there's a remedial thing to be done. So for someone who is close to retirement that doesn't have a retirement portfolio structured yet, the first thing now is like when you say you do a crash course, is for us to do a crash course. We would, there has to be assessment, really. We can't just off the top of our head say, this is the asset class you should put your funds into. So there's a survey or a fact gathering questionnaire that we have, and that will tell us what your income is, what your expected expenses in retirement is. Do you have additional income in retirement? How much do you have saved, if you have any? That will give us an insight to how much do you need in retirement, and then we'll create a structure of between now and when you have to retirement, how much do you have to save for you to be able to meet those obligations. And that would usually also tell you the kind of investment classes, asset classes that your funds would be put inside. So, but one thing is key: whatever funds that are going to be invested for you would be invested in almost risk-free assets. There will be not much aggressive investing that will be done for someone who is very close to retirement. But that assessment is the key thing, because that assessment is very eye-opening. Sometimes you think something is when it isn't. So it is in that process that you're going through that you will then be able to have a full appreciation of what your situation is currently, what it should be, and what you need to do, if I'm making sense. I hope that answers your question.
I thought you wanted to. Okay, your question, sir.
Yeah, thanks. Well, let me join others presenters for the heartwarming presentation we have had. And I should also take this opportunity to welcome our KBC. Join KBC, sir. You're welcome. Probably I should now take the opportunity of the presence of our KBC to ask a question concerning what Dr. DBC spoke on the generational transfer of wealth, of asset or wealth. In Ibadan here, we have a number of companies in the past. Eside Battery, Leland, Compo, Dr. Pepe. You know, we have not been able to pass through generations. Because you cited the case of US and you compare those occurrences. Then what can we do to prevent a reoccurrence of such? Given that we are, inviting investors to this place today. That is one. My second concern is sometimes ago we experienced bears in the stock market. That is, I can say, a collapse of the stock market, where we have the evils of this world, all of them. In that time, I have a number of stock, and I wired them the Intercontinental Securities. At a point when they saw the portfolio, they now beckon on me, man, we can give you funds to buy more. You just use your stock to guarantee that. And that was done. They also took some percentage, management fee, this and that. So when the stock collapsed, I studied economics. And one of the things we learned in theory in those days was investing in stock, in shares, is riskless, is zero risk. You just put your money there, you go and sleep. Yeah. You just put your money there, you go and sleep. So, but unfortunately, people manipulated the stock market. Manipulated, really, because they did not allow free market system to operate. It was manipulation. By the time the market collapsed, my initial stock and the one they bought for me, when they sold the whole, cannot even repay. Cannot even repay. The one they helped me to buy later. And they came to me, say, "Come, Mr. Man, you have to repay this balance of money that you are owing." And I said, "Okay, good." When we signed the agreement, you said by the time this stock fall by 15%, you will sell off. And you asked me to sign. I signed that time. So me, I'm also expecting my 85% from you. They came with Mopo. I said, "Come, you can't harass me. You can only get to court and sort this out." Because we signed. You understand? So the two of us called our lawyers and it was resolved at a point. But my issue is this. Meristem also has advisors. And part of the thing is is management advisory issues, which we signed. And I expected them to, beckon on us that this thing is having issues. At this point, you are advised to come and sell off before the entire thing collapses. I'm now asking, is it the failure of the advisors or what? Thank you so much.
So, okay, I'll start from second one and then go to the first one. So I think, as first of all, there was the age where there was a big information gap. And I believe that now both the regulators, the investor, and the players are sort of closed that gap, incredibly. I'm not saying it's perfect, but the gap has been closed to a great extent. That was a different era entirely. But again, there's no excuse for such. One of the things that I'm certain that happened at that point in time was that people didn't seek information. People just were seeking money. Because if I at least, I read a little bit of economics and a lot of background. This is about the markets. There's been great collapse before that collapse. A market operates in a circle. We are always going to witness that downside. This same market, if you own equities in 2020 when COVID happened, people lost as much as people lost in that era. The difference was that a lot of people now, they're more informed about what they were getting into. The idea of margin and how that was executed, that's a different entirely because it's contractual, and I believe that it was dealt with the right way. But in terms of market expectation, that market will continue to go up does not exist. Market would remain volatile, and that's how it will be as far as equities you're investing in. There'll be days, there'll be boom, there'll be good days and bad days, and that's what it is. But one of the things critical now is that the market is more transparent and about how it operates, at least from our own side of the lens, about how it operates. And there are two sides to that activity nowadays. There's a part where we allow you to do it yourself. You take action and you're responsible for your actions. And there's another half of where, as a firm, we can take that responsibility off you to say, okay, we would help you manage your portfolio. And these are the terms of the management. These are the fees that would earn. These are your, do's and don'ts. That's one side that exists now. If you're not really concerned with the market or you don't have time to look at the market. And second half of where we just give you information. You go and look at it yourself and decide, what you buy or sell. All of this still, as long as it involves equity, there are no guarantees. Because I don't think anyone in this room saw COVID coming. Even the 2007, 2008, to a great extent, of course, people felt the bubble, but the timing was never something that anyone could have predicted. Because even if you all saw the timing, we would collapse the market. Because if all decide to sell on the same day, then the market starts, going down on the same day. So it's the pressure. But what I believe is that we have grown. Market has now gone from open 6-7 hours a day to open between 9 to 4 p.m. every day. The size of the businesses now listed on the exchange. It's a bit more transparency and openness, and I believe, and growth in the market also that has also happened. But one of the things that is critical is that we need to seek information before we invest in equities, because anything can absolutely happen. I hope I tried my best on the first one. I'm sure my guys can go ahead afterwards. But on the first question, I feel like it's a national issue. I think it's beyond this conversation to say that this is how and where to go about generational wealth. I feel like there should be a different gathering, to look at ourselves and say, what are we doing wrong? What are we not doing right? Because the guys who are doing it they will say they don't have 10 heads or something. I genuinely feel that it's a question that we need to have. And then people who are, there are two sides to the conversation. We're looking at it, and families that actually, own those businesses and the ones that succeed and the ones that failed. One of the things here that I personally think is that we don't share enough of those experiences. We don't. Because we don't know why, this person has failed. And the other party is not able to learn from it and address the issues. But again, I personally, it's something that I would open to other members of in this room to give their perspective to it, so that at least we can have a balance. Thank you very much.
Thank you. You have passed it back to us. Yes, he has passed it back to us now. So people in this room should give their experiences. One thing we have not taken into consideration is the declining value of your money. You can imagine I take a life insurance when the Naira was $1.2, $1.4. Not the other way. There was a time that $1 was about 70p, 70K. So I take a life insurance to say, okay, by the time I retire, I will have 10 million naira, which was substantial. It was more than $10 million. But now, along the line, the naira now becomes something else. So my $10,000, my 10 million naira was no more worth $1 million. So therefore, I cannot borrow on that. So what is the essence of my taking insurance today? Maybe I should have put it in real estate. Because for all intents and purposes, real estate tend to be going up. So that's an aspect that you should also study. You are talking to us as if Naira is stable. As if the Naira of 10 years ago, I told myself, I said, if I had known that the Naira would become what it is, I would have spent all my resources to buy dollars in May 2023. So that by June 2023, I will now start selling. Because what I will have bought at 180 Naira now becomes 1.5 billion, 1,500 Naira. So how do you, in that situation, what do you recommend?
I don't think I have anyone after you. I'll leave it there.
You see, on the other side, I think our major problem is policy somersault. For those of us who have invested in industries, nobody wants the company to fail. Nobody. But when you now find that you are not competitive, I'll give you an example. You set up your company to make starch from cassava. If you are in the industry of, or if you are in agriculture, you find that the price of cassava is sinusoidal. This year, in fact, 2 years ago, it was 400,000 naira per capstan. Today, it's less than 10,000 naira. So how do you? No, it's less than 100,000 naira. How do you survive in that circumstance? Because maybe the government said we have to depress the price of money, the price of food. If you depress, so forgetting that what the farmers are now getting is not even up to their investment. So eventually, there will be scarcity of food, the price will go up again, and people will rush again to the cassava industry. So that is the problem that we face. So to the effect that if you make your starch, you can't compare with imported starch. I.e., you have a lot of vagrancies. No light. You pipe water from Asijere to your factory, no water. Which are not the things that are available, that are happening in other places. I had to go to Thailand to find out how do you manage. I found that there was no need, there was no way we could compete with them. So these are all the things you should take into consideration. You're addressing us. Who wants to live? Who wants to pass on to generation our investments? So I just want to chip in this one so that you can take it also into consideration.
Thank you very much, sir. Okay. One final question.
I want to thank you so much for coming, also sharing with us the much you have been. As a young man in 1978, I joined UBA at 22, and we started the agri-finance department of UBA. In 1997, I was retired as a senior manager across the board. What did I see? I saw this country falling from grace to grass. I saw it all. The only thing I could do for myself is to plan my life, because starting before you as a pensioner since 1997, this street, I think it has been grace of God and good planning. The Nigerian populace have been more loyal to the government than government are loyal to us. I'm not here to ask questions. I just want to make contributions based on my experience. Institutions of your nature should create policies, advices to the government to protect the other side. What happened? They set up the government of UBA. All the loans were guaranteed by central bank. Forgetting that for agriculture to grow, there is need for basic infrastructure. You want to set up a poultry farm, you want to generate power, you want to drill borehole. By the time you take all those costs out, where do you find yourself? I happen to admire Kabesi from a distance when we were driving up, because it used to be one of our customers. As all he did, by today, if Kabesi did not invest any money in industry and he was just keeping his dollars, we won't be here. So, Kabesi, okay. Now, we saw the likes of the automobiles at the time in Kaduna started appointing motors, Ololo Motors, Bogajo Motors, all this and that. Overnight, government policy crashed all of them. Go to any of those facilities today. Go and see the quality of the structure that was built there. Go to mainland. You will work for this nation. And what has happened? It has been purely government insincerity and leadership on our part. The day I got to Sabo and they said I had to change a dollar for 380 naira to go to US, I canceled that flight. Yes, I did. I did. Not only that, it was just a chance. And the father says, suffering and smiling. And for how long are we going to continue this? If people come to me with a business proposal, I look at them and smile. Especially all these are brothers from diaspora. I want to set up a farm. I want to do this to come. If your family had not heard people in Iseyin or somewhere, don't go and start buying land there. Because at the end of the day, you produce, you think you are producing, you produce at a loss until the bandits issue came in, that people are even scared to go to their backyard farms. So I don't want to take much of your time. I stand as a bridge between the old and the new, looking at 70. We should be able to advise people coming behind that if you remain docile the way we are, you will suffer more than we have suffered. Because the first kind of I got, my mother called me and said, Bawa, say, ma, say, if you listen to me, you will enjoy life. 3 things I will tell you. That car loan, make sure you don't buy a car. Otherwise, you commit the same sin your brothers committed that made them not to have a house in Bodija. That go and buy a piece of land. Rather than buying a car. And I thank God that house I built that year was 4-bedroom or 4-bedroom that for 150,000 naira. Today I earn rents over $1 million naira. I remember my father took me to somebody who sold me maybe 100 pounds or something at 30 naira. I ended up selling that money with a profit of 50,000 margin, And that was the money I used to build my press quarters. That press quarters today fetches me no less than 400,000 naira per annum. In fact, as I'm talking to you, I'm looking at the end of May to collect another. Not everybody will be as lucky as we are. The way things are going in this country, if there are no seriousness on the part of the people that govern us, honestly, we will always continue to be led astray. I want to stop here and wish this God. So,
You see, I haven't seen both sides. I will say the fault is ours. We are very comfortable in our corner. I don't want to touch politics, but politics determine your life, whether you like it or not. So at the end of it, you will get what you bargain for. If you have quality leaders elsewhere and they are afraid to come out, please go and beg them. But if you say only the people, maybe school drops out and so on and so forth, or people who cannot get employment. So I will still advise that those people who think they have something to contribute should not run away from the something. Take the risk, and then you can give the leadership you want. Thank you.
Thank you very much, sir. Okay, so I'll take two more contributions. I'll take from Oba Kolada Isi and yourself, sir. So we can round off. However, we'll still have engagements in the room, networkings, and further discussions. Thank you very much.
Good morning. No, well, good afternoon, all in the house. And good afternoon, sir. Kabiyesi, sir. Very happy to see you here. Meristem, I thank you and congratulate you for this program. And when I got in and listened, I see that I've come home. Omowale, this is my forte. I'm a fellow stockbroker, and this is what I've done for so many years. Well done. You need to educate people more and more on how to create wealth and make it last. I want to share an experience, a very recent experience, talking about wealth preservation and transferring of wealth from generation to generation. One of my friends, he's been abroad for so long, came home recently. His dad passed on a few years ago and left property, especially in GRA in Ikeja. They are planning, they want to sell. When they got to the market and saw what was involved, they nearly changed their mind. What am I talking about? And I want you to share experience how you deal with your clients in this respect. Government regulations, government taxes, fees. People are always shy to pay fees. Not only fees, taxes. In this case, I'm talking about the house was bought in the 60s. Now we're in 2027, they want to sell. It's worth about 4 billion naira. Capital gains tax on that property is about 800 million. They ran away. They ran away. They don't want to pay such taxes, but they want to make the gain. They want to keep the gain. How do you deal with this when you're advising your clients, invest in this, invest in that? There's this other side where you have to pay fees, you have to pay taxes, and people are always shy. How do you go about it? Please educate us.
Okay, there are more than one answer, but I would answer. First of all, there are actually more than capital gains. And if it's in Lagos State that the assets reside, they would have to first pay 10% estate tax to the state before the pass through property and is cleared for you to even be able to resell the title. Before you don't now apply capital gains, if you are someone who is open to paying that, of course, there are multiple taxes. And I also understand the need that people say that tax is tax. The use of the tax is a different show entirely that I will not go into. One of the things that we do if you're our client and then we have a long-standing relationship is that we can sort of structure the element of payment. And it really just depends on the relationship that we have with the individual. It's something that we can work with in such a way that if tax is the burden and you want to sell,
Of course, there's a middle ground in there that can be coordinated to help you, pay those taxes and also sell, and then of course get the proceeds at the end of the day. So it's something that is possible as long as you are willing to sell. If you're not willing to sell, of course you'll be there. But if you're willing to sell, yes, assets worth 4 billion, taxes are 800 million. That's it. But things is that you cannot avoid the taxes. It's only 10%. The 10% is not unavoidable. The withholding tax element of it can be negotiated, I believe, but the 10% estate tax, no, it's not. That's why you pay it in advance before it is cleared. But the other leg of the tax, which is the capital gains, can be paid after the sale and can be negotiated. The tax authorities are very, depending on the state also again, they're very flexible.
I'm sure you encourage your clients that they cannot avoid it. They have to pay.
No. As I said, I'm not the capital gains element of it. I cannot speak to it, but you see, the estate tax, you have to pay. And so if you don't pay it, there's no title. And that's the reality. Thank you.
So another way is when people are buying properties, the structure with which they buy their properties. When he was talking about the various vehicles for estate planning, people are becoming, the information is available now. It depends on whether someone wants to use it or not. Someone who buys their assets in a trust when they're buying, if that asset that you're talking about had been in a trust a long time ago, they would have avoided that estate tax. There will be no need for estate tax in that situation because the asset would be in the name of the trustees and they would sell. And I think the only person who would now have the responsibility of payment on all those other taxes would be the buyer. Yes, they wouldn't be paying estate tax on an asset that is in a trust. So the way you structure the various vehicles you use to structure your assets can also go a long way in tax planning as well. And also the time value of money that KBAC Olubadan spoke about before. That's why we always tell people that, you see, some people would rely on their RSA savings as retirement benefits or insurance. Those don't factor in inflation. When we are planning retirement portfolio for our clients, we factor in inflation and we let you know that that money is not the same at the end of the day. So the contributions, the investments and all of that, and the eventual results that you have at the end of that portfolio, they are inflation adjusted. So that is factored into our advice to our clients. Thank you.
Kábíyèsí, very majesty, sir. I'm Taiwo Adewale. I retired from the civil service in Oyo State as a permanent secretary last September. Let me take this. Another permanent secretary, she retired before me. Another permanent secretary, he retired in August. Prof is about to retire. Not yet. So my son introduced me to Meristem just about 2 years ago. And after my retirement, I went and invested again. And I told him some weeks ago, that I regretted that if I had known that such an organizational an arrangement was on ground. Because in civil service, I'm happy Akabiesi is here, was the governor of your state. If care is not taken as a civil servant, you will be used
I will not even have time to think about any investment. And that is what has actually happened to me. Like some people that are so dedicated, you'll be engrossed with that job. Before I retired, from morning, 8 a.m., I will go back home, even by 8 p.m. in the night, 7 p.m. There was no time to think of any other thing to do. Now, after the retirement, because I was just telling our senior colleague here that is it not even proper, because I ventured into that investment because I love agriculture. When Kabis was talking at that time, I love agriculture. I ventured into it. Something happened to me, if not because I had some shock absorber. The risk in agric, it almost turned. Is it not better to sit down and be eating your amala and begiri instead of going to this agric thing? This gratuity that I collected, although I invested with Meristem, I got a chunk of it. I'm now saying this. I'm now putting it to Meristem. Despite that, the fact that my son introduced me, because I've been studying it, studying your organization, studying your investment company. I don't know how you want to do it. A lot of people are there at the secretariat, at the top echelon. Permanent secretaries, general managers, this and there. So the mistake I made, I don't want them to make it. What do you mean? Is it possible for you to make yourself available for them? For advocacy in this? Because we are discussing here. We are now bidding, we even have trust. My sister said, that we'll discuss at the end of the day, she will get it. But some people don't have the opportunity here. Many are there. So how do you get across to them so that they will not resort to faith? That, well, at the end of the day, let me just sit down. Like myself, I thank God, I'm not spending money on any children to send to school again. God has done that. So for today, you don't know what you have done today. To me, you have really changed my mindset, because I decided after the terrible experience I had, I said, I'll just be waking, sleep, wake, eat amalangbegiri. My returns from get it. If I want to replow, if it's not possible to replow, spend it. So I'm putting it to you. How do you want to help our people, civil servants?
Sir, you want to say something before I... Oh, okay.
Thank you very much. Kabiesi. I am a retired professor. And typically of a professor, we are not serious. Because most of the time you will hide somewhere writing journal papers, using your salary to also fund the journal papers. We don't know anything about investment. But some of us are so lucky. I am one of these few lucky ones. I decided to run into consultancy. I was doing that with my teaching research and extension in the university. At the same time, I was running a consultancy. But no idea of all this investment that few people are now bringing in. Please, I want to advise, it's an addendum to that you have to reach out to university. Most of my colleagues there, they don't know anything. They are in the wilderness. And it's a gate of no return, just like this thing we have in the western coast of West Africa. When they take slaves to abroad, they say, gate of no return. Most of us, we are in that gate of no return. Now, they lured us to join this, what is the meaning? The meaning of this retirement plan. There's nothing there. Absolutely RSA, useless. And They kill your money. I work for 40 something years. I am just a young man of 73, going to 74 now. If I had not struggled, I wouldn't have a roof over my head. If I had not struggled, I would not be able to train my children abroad. So you can see the kind of life that my colleagues are now facing. Please, Meristem, I'm removing my cap for you. Please reach out to ASU in the university. Because my people there, they will perish. That's a fact, because we don't go out. We are not exposed to outside world. We are exposed to, just like civil servant first. We are public servant. So thank you very much, sir.
Thank you, sir. Thank you, sir. By getting the feedback from Fumi.
Okay, thank you. Thank you so much. As we're really glad that we have this feedback. And the truth is, we set up all of these Center of Influence seminars just to address some of these gaps that we've identified. This year we've been in Delta, last year we were in Abuja, we've been in Port Harcourt and some other cities. And we believe that that's how we will preach the gospel. And we would also use our attendees to help us preach the gospel. We know how we can be in certain sectors, trying to get the link into these places sometimes. Even when you want to just do a financial planning session, you're not even asking for funds or asking for payment, but you get some roadblocks. So we believe that that is one of the things these sessions would help us with. By the time we have some of these attendees that have the links into these places, we can be partners to ensure that we preach this financial planning sermon to everybody, and hope that after it, we will not just hear it, but we will implement it, because that's another problem. So some of us have heard these things in the past, but did we implement? So we believe that as we continue with all of these Center of Influence seminars, going around and identifying some key sectors that we want to reach, we'll also have partners in you to help us meet these goals. Thank you.
Thank you very much. I think it's worthy of giving the panelists a round of applause. Thank you for your contribution, incitement. And like I said, when we were in the middle of this event, I said the Badon people are elite. I can't count how many professors, how many PAMSECs. We have His Imperial Majesty. We have kings in the room. I think it's worthy of clapping for yourself. It's a beautiful city. I think it's one of the most engaging cities we've visited in the last 1 year. It's fantastic. You guys are fun to be with. Thank you very much. Yes, a lot of us have talked about where our assets are domiciled. Are we amplifying them? Can we do better? I heard all of the real estate positions, some of the shares that you might need to dematerialize and then start earning higher on it. So we're happy. We have our room of advisors at the back who will be happy to address individual needs and concerns. If you're not able to sit with them, you can share your phone numbers. They will follow through with you via calls, emails, or even visits to your offices. As our office in Ikoyi there is just a stone throw. In 1 hour, we are here in Ibadan to have engagements with you. It's such a beautiful day to be here in Ibadan, and especially thanking His Imperial Majesty Oba Rashidi Adewale Ladoja for joining us and even contributing. You know, it's such an honor. For the record, I think I'll give KBC to echo it, so we are able to hear him and make this.
I said I've been with Meristem since 2008. Yeah.
So you see all the fall of COVID, all the falls. I'm sure KBC was well advised. Thank you very much for your relationship. We don't take it for granted. We have plans for lunch when we are pulling the curtains on this event. So please step out, have lunch with us. Over lunch, we can discuss further engagement, have your accounts opened. For you who already have accounts, find a way to amplify the ones you have. And then any kind of discussions, we're happy to have it with you. And on that note, I'll call the Ed Wealth Advisory for our final note. She has spoken as a panelist, and now she's speaking as Meristem in Ibadan. Round of applause for Fumilola Adekola Daramola.
Thank you. My name has wealth written all over it too. I'm asking you to join the wealthy gang. So I'd like to say a very big thank you to everyone. Thank you, sirs and ma'ams, for taking time out of your very busy schedule to join us today. I'd like to thank our esteemed guests, POMSEX dignitaries for presence here today. The active participation, I think, was really good. We had a very good time. You shared your experiences with us, and I think every one of us, even us, we've learned one or two things today. We are deeply grateful for the presence of Oba Kola Daisy, the OC Olubadan of Ibadan land. Thank you so much for joining us today. And we also want to thank especially our Imperial Majesty Oba Rashid Adewolu Ladoja Arusa Won, the Olubadan of Ibadan land. Thank you so much, sir. And they are sir. We'd like to thank our panelists also. I think the session has been very insightful and thought-provoking, if you can see that ourselves. Today's conversations have reinforced the immense opportunities that exist within the wealth management space and the importance of intentional planning, informed decision-making, and trusted partnerships in building sustainable wealth. At Meristem Wealth Management Limited, we remain committed to helping families, individuals, and institutions build, preserve, and successfully transition wealth across generations. As the proud subsidiary of Meristem Securities Limited, Meristem Securities Limited has subsidiaries. We are uniquely positioned to deliver holistic financial solutions through the strength of the entire Meristem Group ecosystem. Beyond wealth management, our subsidiaries provide a broad range of specialized services designed to support every aspect of your financial journey, from investment advisory and stockbroking through our Meristem stockbrokers, corporate finance and capital raising through Meristem Capital, trusteeship and estate planning through Meristem Trustees, registrar and probate services with Meristem Registrars and Probate Services, financing solutions from Meristem Finance, to bespoke legacy planning and multi-generational advisory through Meristem Family Office. We have given every one of us partnership indication cards earlier as we're working in. Please, let's take time out to fill these forms. It would help us understand you and also help us in partnering with you. We'll be delighted to continue the conversation and explore how we can help you build, grow, protect, and transfer confidently. Like I said earlier, the best financial plans are not just discussed. You have to implement this plan. So please take the opportunity today to speak with our advisors. We have them at the back of the hall. Please engage them. They are more than willing to have these conversations with you. Thank you so much for taking time out of your very busy schedules to be with us today. We really do appreciate it. And we hope and pray that we can take these conversations further than this. That is not limited to what we've heard today, but we take time out to implement so that we can not just grow our wealth, but we are preserving and transferring. Thank you so much.
Thank you very much, Fumi.
Imagine a financial partner that understands your dreams, whether it's saving for your child's education, building an emergency cushion, or growing wealth for the future.
WealthBuddy is that partner, seamlessly connecting your daily finances to your long-term aspirations through investing and saving tools that work across all your devices.
Do you have the short, mid, or long-term goal? We provide smart automated tools to make it happen. Set any target amount. Choose your perfect savings rhythm and watch as we handle the rest, moving your money effortlessly from intention to reality.
When you're ready to grow your wealth, our curated investment marketplace opens doors to opportunities that were once available to financial experts.
From government-backed treasury bills to dollar-denominated portfolios, every option is carefully selected to match different goals and risk appetites. All managed by a team of experts, so you can earn competitive returns without the usual complexity.
The journey to financial freedom starts with a single step. Take that step today with WealthBuddy, where your money doesn't just sit, it grows, evolves, and achieves alongside you.
Welcome to WealthBuddy.